Hey everyone, today I want to talk about the massive drop in Central Bank of India shares. On April 2nd, 2025, the shares plummeted nearly 10% following their Qualified Institutional Placement or QIP. This wasn't an isolated incident, the shares had already been declining, losing over 17% in just 3 days. So what's triggered this sell-off? First, let's get into the QIP details. The bank raised Rs 500 crore by issuing about 370 million shares at a discounted price. Key investors like LIC, NPS Trust, and major public sector banks jumped in, but this didn't reassure the market. Investors are worried about a few big things: credit quality and earnings visibility being top concerns. There are also broader asset quality issues within the PSU banking sector that can't be ignored. Analysts even draw parallels to potential Vodafone-like loan risks, which is a pretty big red flag. Other PSU banks like Indian Overseas Bank and Punjab Sind Bank also took hits, dropping 4.5% and 6.25% respectively. This indicates a sector-wide issue rather than a problem isolated to just one bank. So what do the experts say? Ajit Mishra from Religare Broking mentions that markets are now favoring banks with a strong deposit credit growth balance. Kranti Bathani points out that PSU banks are under scrutiny for their earnings sustainability post-QIP. In response, we're seeing selective investing. Investors are holding on to banks with strong fundamentals and offloading shares of those perceived as weaker. Central Bank of India's focus on retail, agriculture, and corporate lending hasn't shielded it from this market sentiment. Even as the BSE Sensex was up slightly on April 2nd, Central Bank of India shares hit a 52-week low. It's clear that investors are spooked, and it will be interesting to see how the bank navigates these choppy waters moving forward. Stay tuned for more updates.